What if I told you that adding just one great ETF to the combination of QQQI and SPYI could create a better, more efficient, and juicier income portfolio? Now, I'm not just talking about any ETF. I've done some research and I've thought and I'm seeing how can I make the performance do better, plus maintaining a great yield that pays you monthly. And this video is about just adding just one ETF to this 2-fund combination to make you a great 3-fund income producing portfolio.
This video is purely educational content and should not be considered personal finance advice. I'm not a licensed financial advisor and I don't know your financial situation, risk tolerance, or even investment goals. Past performance doesn't guarantee future results, and always do your own research and consider consulting with a qualified financial professional before making any investment. Alright, let's get on to the video.
Hey guys, my name is Steve and I run the Frugal Expat website where we try to help people to save more and invest better. In today's video, we're talking about a 3-fund income portfolio, and this could be one that you may want to add to your combination, to your portfolio. So let's get down to it. Let's talk about kind of the greats, the goods, the bads, and even if there's any uglies. And first of all, SPYI and QQQI are some great ETFs that you could add to your portfolio. Adding a combination of both give you kind of exposure to the S&P 500 and the Nasdaq 100, plus giving you some great income through option selling. Now, the problem is the price appreciation just isn't there. Over the last year, QQQI's price appreciation is around 5.65%, while SPYI is around 5.06%. Now, you could be adding something that gives you a little bit more growth, like a growth ETF, like a QQQ, but then with that adding on to it will lower your monthly income. So today I've looked and I've researched and figured out and found one ETF that could be added to this to kind of add some of that growth, but also keep that income there. And that's what most people are looking for. Most people are looking for that income portfolio that keeps that yield going and going, plus also allows the entire portfolio to grow even stronger when there's up markets, and also give a little bit more diversification in holdings. So what we're looking for is, price appreciation, different holdings, different income strategies besides just option selling, and better risk adjusted returns. And so we're going to talk a little bit about this. We're going to break down the 2 ETFs and then break down the 3rd one and see how you guys can create this perfect income portfolio. Our first ETF is going to be SPYI. Now, SPYI is the NEOS S&P 500 high income ETF. This ETF has been around the longest on this list out of the 3 ETFs. Now, it primarily focuses on the S&P 500. It's got those assets under management. What it does, it sells out of the money covered call options, and what it does is it creates a good income flow from those premiums. Now, the cool thing is with the NEO strategies is when there are possibilities out there, they will also do some short buy call options when kind of assets have dropped to lowest, so then they can be able to kind of maximize on those portfolio and those distributions. So when the assets go back up, they'll be able to profit on those call options as well. And that's the cool thing. Now, SPYI does have a yield of about 11.6%. Like I said, it's been around the longest. It's only got about a 5.06% price appreciation, and with that, you're going to get about an 18.58% return of the last year. So it's got a pretty good total return. It's got a pretty good yield of about 11.6% and a good moderately sized price appreciation. So there's not really that much NAV erosion, and that's good news to those that want to invest into SPYI. Now, if you're building a great income portfolio, you may want to make this as like a base, as like the core of your portfolio, because it tracks about 500 different companies. It's on the S&P 500. It's not as volatile as maybe a tech ETF, and so this one could be a good one that you could make into your core. Now, our next ETF is going to be QQQI. Now, QQQI is the NEOS NASDAQ 100 High Income ETF. Now, this ETF tracks the NASDAQ 100. It's got those assets under management. So we're talking about, those great ones like Nvidia, Broadcom, Apple, Microsoft, Tesla, Amazon. These are some great ones in there. There's also Costco. And with the NASDAQ 100, you have the top 100 companies on the NASDAQ exchange and those that are non-financial. So you're not going to have a JP Morgan. You're not going to have some of those financials on this ETF. Now with this ETF, you are getting a yield that's around 13.61%, and on their website it says 14%, but right now as I look at my Seeking Alpha, it says 13.61%. So it does have a great yield, a part of it. Now both these ETFs do have an expense ratio of 0.68%, so it costs about $68 for every $10,000 invested. But when we look at QQQI is one of the fastest growing income ETFs out there. It's got about $7 billion in assets under management, and in 2025 it won Best Active ETF. And so you have a great management team behind it. You have a pretty good yield, and with the price appreciation sitting at about 5.65% and a total return sitting at about 21.2%, it is a pretty good ETF. Now this ETF does give what people want. It gives you income. It gives you slight growth of the assets, but the main part is the income portion. Now, it does the same strategy as SPYI. It sells out of the money call options, cover calls on its assets under management, and so you're getting some of that good premium. Now, it does have a little bit of a capped upside, but it's not selling 100% of its portfolio, so you have some of the portfolio able to continue to grow. And what Neos likes to do as well is when some of the assets kind of drop, kind of like in April, they'll buy some call options, and so in order to capture some upside with this ETF. So when the market does go right back up like it did in April, so it went down and went right back up, it was able to capture some of that upside and continue to grow this ETF for the future. So I like QQQ. It is a great one that's got great yield. It's got some great assets under management. It's got a good team behind it, and it's a good one that can add some more growth of the yield into your portfolio. Hey guys, if you like this video, make sure to hit that like button, subscribe, and one of my favorite places to track my portfolio is Snowball Analytics. I've talked about Snowball Analytics before because I've been using it since 2025 in February. And it's a great place to kind of see how my portfolio is doing against the S&P 500. It's a great place to see how my assets are doing. I can track them. They sync. I can see it on my phone, my computer. I can also look up different ETFs within this app. So that's a great place to look it up. You can sign up for a free version or you can sign up for a paid version. Use my link in the description and the pinned comments for a discount, or use my promo code, the Frugal Expat. Now this is an affiliate link, so I'll get a little bit commission, but it's no cost to you because you are using that discount link. All right, let's get back to the video, and remember, like and subscribe. All right, let's get back. Now, so far with these two ETFs, you have two ETFs that have not the biggest price appreciation. So we're missing some of that price appreciation part, but you do have a solid core of SPYI. You have a growth portion as in QQQI, as in growth of yield. But what we really need is we need growth in price appreciation, but consistently keeping that yield and also adding maybe some other attributes to it with maybe some dividends, and that's not a part of that yield. And so the one I'm looking at is qdvo. Now qdvo is the Amplify CWP Enhanced Dividend Income ETF. It's got a current yield of about 9.8%. It has a price appreciation of about 9.58% over the 1 year, with a total return of 21.58% in that 1 year, which beats QQQI at 21.2% and SPYI at 18.58%. So this ETF gives a little bit of income and growth. What it does, it is building a portfolio of dividend companies that are growing. It builds a portfolio of those great tech companies and those great growth companies in order to give more price appreciation. So you have in this portfolio, you have Nvidia, Broadcom, You've got Apple, Microsoft. You have Micron, AMD. So you guys got some great tech. You've got Meta. Now you also have some dividends along the way. You have AbbVie, Home Depot, Coca-Cola. And so these kind of combined, you have about 20 to 40 different stock holdings that are mixed with an income and growth portion together. And it's going to sell some cover calls on some of these assets as well, creating some more income. So it's going to grow at about, it grew about 9.58% in the last year in the price appreciation. Plus it had a 9.8% yield in giving it a total return of 21.58%. So this is a great ETF that you could add to this 2-fund portfolio, making it a perfect 3-fund portfolio. Now, I don't think it is perfect because you can do so many different things with this portfolio. But if I look at it and I think, all right, I got an S&P 500, I have a NASDAQ 100, and I have an ETF that's giving price appreciation plus yield, and this is a great one that you could add to your portfolio. Now, how would I put this portfolio together? First of all, I'm going to make SPYI about 50% of the portfolio. I'm going to make QQQI about 25% of the portfolio, and I'm going to make qdvo about 25% of the portfolio. That way I have about 50% in my core and a 25% in a little bit of a growth of the yield and 25% growth of the price. And so combined, we got some pretty good yield. Now, if we combine this all together, the yield's going to come out to about 11.6%. So SPYI is going to be producing about $483 per month. QQQI is going to be producing about $283 per month. And QDVO is going to be producing about $204 per month, giving you about $970 per month. And that's about $11,640 per year. So you're getting a pretty good yield. You're getting some pretty good price appreciation. You're getting some pretty good companies within this ETF. Now, how does this work together? It is a complementary portfolio. So first of all, you got SPYI, which gives you a broad market exposure. So you're selling cover calls on the broad market, giving you some stability. You're getting QQQI, which gives you technology and growth and giving you some appreciation of that growth of the yield. So we're talking about the growth of the yield is anywhere between 12 to 14 to 15% with QQQI. And that's amazing. So that's going to continue to grow the yield for this portfolio. Then you're getting QDVO, which is giving you a price appreciation. So we're growing the price of this portfolio instead of having some NAV erosion. You're also getting some stability with it having some classic dividend paying stocks, and it's a diversification within the companies, giving you not only option premiums, you're also getting dividends. So that's good news. You're getting a whole bunch of other things. Another cool thing with this portfolio is you're going to get paid monthly. Classic dividends are going to pay usually quarterly. So you're going to get paid every single quarter. But with this portfolio, you're going to be paid monthly. And that's the cool thing. It's going to continue to create more cash flow. If you drip it and let it reinvest, it's going to continue to build and build. And that's a great thing. So if it does dip, the cash is going to come and buy it cheaper, and then when it goes back up, it's going to continue to snowball. And that's a great news for those that are looking for income, those that are looking for retirement income, those that are looking for maybe something different a part of their portfolio. Now, there's a lot of different cover call ETFs, and I have talked about them, and they are great to use. So if you want to talk about them, leave in the comments. What are some of your favorite cover call ETFs? I have talked about maybe these 3 before, but putting them into a portfolio sounds great. What is your perfect income portfolio? I want to see in the comments. Let me know. Let's start a conversation. Because, my way is not the best way. It is the one that I've decided to go with. But you may have a better way, and you may have some good strategies too. Leave it in the comments. Let me know. Oh yeah, and if you want to check out a great video about some of the best cover call ETFs for 2026, check this one out. And I'll see you guys in our next video.